So I'd show up at this, 7,000 square foot house on the water. He has, Rolls Royce in the garage and like the vision. Here I am, like a broke college kid, quit my corporate job, no income, with just the dream to come to Miami and make money. And ultimately, yeah, I just started dialing every single day. So in that first year, I was able to secure 18 listings and 8 million in sales. And it wasn't like his business, but I could use his numbers. And, going back to the mentor, he always said from the beginning, first of all, as real estate agents, we get sold more in this business than we're selling houses. Everyone always has a new product or new lead service or whatever it is. So without his direction, I probably would have spun out and been lost. And I was also able to use his sales numbers to go on these appointments with him and say, hey, we have 800 million in sales, whatever it is. And then after a year of gaining my own experience, I eventually went off on my own and built it from there.
Welcome to the Peak Profits Podcast, your guide to maximizing returns in passive real estate investing. Hosted by Bryan Morris and Chris Ward of 7 Peak Capital, we dive into conversations with industry experts, sharing insights, strategies, and stories to elevate your investment portfolio. Whether you're a seasoned investor or just starting out, this podcast is designed to give you the edge for financial freedom. Get ready to unlock new opportunities, discover the secrets of successful investing, and take your passive real estate investments to the next level. Let's get started and reach those peak profits together.
Welcome back to the Peak Profits Podcast. Today, we're joined by Nick Grazicki. Nick has sold over $130 million in real estate deals there in South Florida. I met Nick a couple months back in Phoenix at an event, and it's been a pleasure to meet you, and we're excited to have you on the show. Nick, welcome to the podcast.
Hey, thank you both for having me. I appreciate it.
Of course, I'm excited to get into your story today, and catch up a little bit more than we did in Phoenix and talk over some of those lunches, but really want to get into how you got into the career. Obviously, impressive career so far in the real estate industry. You moved to South Florida as a real estate broker, and you brokered over $130 million in real estate so far, and you're continuing to do so. So can you take us a little bit through your journey and how you got started in the real estate space?
Yeah, so I guess I'll take us back to when I was in college. I'm from Michigan originally, always had a dream of coming down to Florida. My parents and grandparents, they've always vacationed here on the west coast of Florida. But anyways, when I was in college, I was like, well, how am I going to get to Florida? What am I going to do there? So I was originally studying to be a dentist, freshman year of college. And I had this first year experience class and they said, well, why don't you fill it out, take the test. And so after I did that, it came back, well, you should switch your major to entrepreneurship. And I was like, oh, I never really thought about that. I've always worked for myself. I had, DJ business and head sitting, always had jobs for myself that I created. And so when I looked at the curriculum, I was like, well, this looks a hell of a lot easier than dentistry. I guess I'm going to switch my major. And initially after graduation, I was like, what the hell did I do? Because how am I going to get a job in entrepreneurship? I just paid $100,000 to go work for myself. And what am I going to do? Show myself the diploma? So I was like, that was a poor idea. But anyways, I was watching, actually, when I first got out of school, I started reading the Entrepreneur magazine, and I came across a guy, Scott Everett, who owns S2 Capital, and it was one of the fastest growing real estate companies at the time and still is in Dallas, Texas. And so I reached out to him cold on LinkedIn, and I was like, well, what do you do? How did you start your company? And he said, well, I syndicate multifamily apartment buildings. And so it was the first time I really heard about that and really dove deep into it. Like most of the people that are interested in the space, got into all the books, the Grant Cardone, you name it.
What year was that?
That was in 2015. And it
That's
was right.
just after it started getting hot too. Like syndication came about like early and
Exactly.
starting to boom market.
And he started his firm in 2012. But the article that I found on Inc. Fastest Growing Company said something along the lines of from waiting tables, food stamps to multimillionaire in a short amount of time. So it was only 3 years in when he started his business. And so I reached out to Scott cold and, he told me about it. And I said, this is what I want to go do. I'm graduating within the next year. This is what I'm going to go do. And when I graduated, I thought, well, I don't know who the hell I'm going to go raise money from. I've never done a real estate deal, and I don't even know how to value these deals. Like, how am I going to do this? And so meanwhile, I was also at the same time watching the TV show Million Dollar Listing on Bravo, and I saw the commission checks come across the screen, and there was a Miami show that was aired. It was only one season, and so I thought, well, that's one way to get to Florida. I can go down there, sell luxury real estate, and build my portfolio of high net worth clients, build some trust in the industry, and ultimately, like, eventually segue into it. And so that's what I did. I moved down to Florida and started getting into brokerage.
That's a lot to unpack there, Nick. I was trying to think of your cool slogan from like teeth to real estate or something like that, given that you started in dentistry, but I couldn't come up with anything better than that.
Yeah,
So it's really cool. We have a lot of people that come on the podcast that tell us about kind of how they started into to real estate, and a lot of people talk about going through books, YouTube videos, and really educating themselves that way. I think back in 2015 when you were doing that, podcasts weren't really a thing. So again, a lot of the purpose of this stuff is to help educate people that are trying to get into the real estate industry or are trying to understand what the real estate industry is really all about. And your journey again has gone from complete zero experience to having raised or having sold over 100 or brokered over $130 million in real estate, which is absolutely incredible. Can you talk us through what did it feel like when you first got to Florida after you had cold outreach to this guy? You've now made the move with a diploma that you could show yourself, and you're now trying to get onto a Bravo TV show where you've seen commission checks. You're like, I want a piece of that. What did you do when you first got to Florida? Because Florida has been a booming market for many, many years. So first of all, great choice in picking Florida as where you're going to start this. But how did you go about kind of really building your network once you got to Florida? And how did you really start your journey to get you to 130?
yeah. I mean, so backing up, when I first saw the show on Million Dollar Listing, I started researching. The guy's name was Chad Carroll. And so I always read, I'm a big believer in reading, and I try and read a book a month, whether it's like entrepreneurship, sales, business, whatever it may be. And all the time in the book, it always comes back with, find yourself a mentor, figure out what it is you want first and foremost, and then find someone who's already done it. Because if you don't have a mentor that's already accomplished it, how are they going to teach you how to get there? So Chad being the mentor that I wanted to go work for, I said, I'm not going to be able to go raise money initially. I've never done a deal. So at the time, I canceled my apartment that I had. I had a corporate job, real briefly out of college doing sales as well. I thought, I got to figure out a way to go move to Miami. So I canceled my apartment lease, moved back in with my parents. And I told my dad, I said, I'm going to go work for this guy on the TV show. He's like, all right, well, give it a shot. So I started bugging him on Instagram for like 6 months. And he finally said, actually, I finally got a hold of him because I texted someone else on his team and I said, hey, I got a real estate question about one of your properties. Can you give me a call back? And the guy quickly, of course, calls me back. He's like, which property are you interested? I was like, actually, can I talk to Chad? And he was just like, okay, kind of blew me off. And then eventually I met a guy on LinkedIn who knew his broker and connected the two of us. And finally the guy's like, damn, you've reached out on Instagram. You followed up an email, text, call, like whatever you could do. He's like, why don't you fly down to Miami and I'll come meet with you. So January of 2019, I flew down to Miami to come meet with him. And I quickly realized in this business, our days change by the second in brokerage with showings and everything else that pops up. So I fly all the way down. It was like -17. I had a car that heat didn't work. I literally thought I was going to get frostbite on the way to the Detroit airport. And get down to Miami and it's the complete opposite. It's 90 degrees, really, really hot. And Chad said, I'm sorry to say this, but I can't meet you. I got a busy day. Things changed. And so I'm like, well, I'm in Miami. So I ended up like going to meet. I had a plan just in case, he couldn't meet. So I had a plan to go meet all the local big brokerage firms in town, Sotheby's, Douglas Elliman, all the big names to meet the broker. And of course, they took my heartbeat and a pulse and they said, well, you're hired if you want a job, like how all brokerage firms are. But ultimately, I didn't want to work for them. I wanted to work for Chad. So I continued to follow up with him. And he ended up interviewing me like or his brother-in-law did on his team. They ended up interviewing me over the phone, and they're like, "Well, when can you start?" And I'm like, um, or they said first, they said, "Do you have your real estate license?" I said, "Not yet, but I can get it." And he's like, "Well, get it first and call me back." So then I went in the next day to work. I quit my job. And, at that time I was living back in my parents' house, quit my job, and I spent the next like literally 17 days just getting my license as fast as possible. So I called him back in 17 days. I said, "Chad, I got my license." He's like, "I don't think that's possible. Like it takes, I don't know how you did it that fast." I'm like, "Well, I got it. I quit my job." And he goes, "Well, when can you start?" I said, "Give me 2 weeks and I'll be down in Miami." He's like,
That's
"All right. Well, I don't know how you're gonna do that, but like figure it out, I guess." So I went on Facebook Marketplace. I found a random roommate that wanted to sublease their apartment from University of Miami. And I said, "Can I come, I'll take your sublease." I didn't have like income to prove to get like an actual apartment. So I had to do it this way. I didn't have to sign on any dotted lines. It was $1,000 a month. It was in a college campus, basically. Came down, and when I first got here, I didn't even meet Chad for the first month. So I'm like, is this guy even real? Like, I was just like shadowing random people on his team. I'm like, I just came to Miami. This guy still never met him. And basically, what they had me do, like you asked how I built my network, is I cold called. It sounds like hell, and it was. But I cold called from 8 in the morning to like 8 at night. And those were the legal hours they allow you to dial. So I basically had like a triple line dialer, loaded it up with data. Chad, taught me this is what to do. I was the first one at his office was I actually out of his house at the time because they were in the process of getting him a new office. So I'd show up at this, 7,000 square foot house on the water. He has, Rolls Royce in the garage, and like the vision. I like here I am like a broke college kid, quit my corporate job, no income, with just the dream to come to Miami and make money. And ultimately, yeah, I just started dialing every single day. So in that first year, I was able to secure 18 listings and 8 million in sales. And it wasn't like his business, but I could use his numbers. And going back to the mentor, he always said from the beginning, first of all, there, as real estate agents, we get sold more in this business than we're selling houses. Everyone always has a new product or new lead service or whatever it is. So without his direction, I probably would have spun out and been lost. And I was also able to use his sales numbers to go on these appointments with him and say, "Hey, we have 800 million in sales, whatever it is." And then after a year of gaining my own experience, I eventually went off on my own and built it from there.
That's incredible. I think a couple things that I want to highlight there is one is just like your tenacity and like determination to like make shit happen essentially. Like you hear about these people and like you're just like a top-notch salesperson who's going out and prospecting for what you want.
Mhm.
So like you went from like hammering this guy on on LinkedIn to figuring out what he did, right? Having this dream after you saw a show, and I think we've all been through it because Chris and I have met Ryan Serhant here in New York, and
Mhm.
like you'd see $1 million lists in New York, and they follow around Manhattan. They see all these like insane apartments that Manhattan has to offer, and then it's like $1 million commission check. You're like, holy shit! Like, let me get into that industry,
Literally.
right? It's like so it's all glitz and glam and awesome, but then like you actually took action to make it happen. And you made the move, right? Like you kind of just jumped off the cliff without the parachute and figured out on the way down how
I
to
burned the
land it.
boats.
And no, I mean that's just incredible. Like aside from the whole real estate thing is what you've done. And I think even everyone listening is like there's so many resources out there today with, the internet and how you can just make things happen that you want to do. And there's don't you essentially don't take no for an answer and figure out the path that you want to go. And you've done that. And so
Yeah,
obviously now
I read this quote in a book I'm reading right now, and basically he calls it OMR, and he's like, first focus on the outcome, don't worry about anything else. Like figure it out what it is that you want and who has what you have. Right. So first think of the outcome, then the method. Like, all right, what method are you gonna, go after this goal? And mine was find a mentor. That was my method, so I could kind of like just basically duplicate his success, and if it worked for him, it'll work for me. And then the last one is, so it's your outcome, your method, and then what resources you have. So like use every resource you currently have and obviously build on that. But the biggest thing is I think you have to do it in that order. Everyone always thinks of like what resources do I have first? what method could I use those with, and then what's the outcome of that? They do it backwards and then
Work
they
it
limit
backwards.
themselves.
You want to work backwards as to where you want to get to. And you're like, I'm going to end up in Miami, so how am I going to get there? All right, let me start by bugging Chad on Instagram for 6 straight months.
Literally, all right, then he's like, if this bastard can follow up with me this much, maybe he can get us a few listings.
Yeah. And then call a listing, talk to an agent, but don't want to talk to the agent. Try to get transferred to Chad.
Literally.
But no,
And I still to this day don't think that agent, Devin K, like knows that that was me who called. Like I know of him, like, but I don't think he knows, like, obviously he knows of me, but I don't think he knows I'm that guy that called to get to Chad.
yeah, no, that's awesome. And so you went and you had a lot of success that year. Obviously, you sold $8 million in your first in real estate. You probably didn't know much about real estate prior to getting to your license, right? Like
No, I
it's
didn't
an
know.
industry where you learn from experience, right? In a lot of ways. And so you were able to kind of ride on some of the experience of Chad and his team and the brokerage firm.
Mm-hmm.
And we can kind of correlate to,
And I
your
would say
partner.
too, like with that, um, I would tell anyone listening, looking to get started, whatever it is, not just real estate sales, but don't be afraid in the beginning to pay it forward in terms of like my split with Chad was every single transaction, I only took 15%. So I sold 8 million. If I would have been on my own, I would have made over $140,000, whatever it was. But I only took home 40 grand that year because I was paying it forward to Chad to learn. But I also like completely hockey stick up way past everyone else. Everyone in this business always starts in the lower price point, trying to like get their way to higher numbers. But once you start building in the lower price point, that then becomes how you're known in the marketplace. So it's like you have to sometimes, pay it forward, I guess.
Well, you've anchored yourself as a more of a luxury broker with more high-end properties because, and like you might have been giving away more commissions up front, but you knew on the back end that if you could start to build your track record of success with $5 million plus properties, and you had success with that over the first 12 months, and you might not have been making as much commissions as the Bravo, a TV show, said you would make on some of those deals. You knew that they would come full cycle at some point.
Well, basically what
And you've jumped
yeah,
some of those levels.
and so basically what happened was it was March 5th of 2019 is when I started with Chad. And January of 2020, I landed on a cold. So I was in Miami at first. And so January of 2020, I was basically calling from Jupiter all the way down to South Miami, which is a pretty large coast of South Florida. And so I was spending a lot of time in the car and ultimately never even really knew Palm Beach existed. I landed on a deal up there, ended up selling it for 2.1 million. And at that time, I was far enough along. I was like a year into the business where I'm like, okay, no one's helped me in this deal anymore. Like the training wheels are off. The trust was there. I did the whole deal start to finish, but at closing, I got 10 grand. Other person got 50 grand. Like I'm grateful for the mentorship. However, I have my own life to fuel and my own dreams to fulfill. So I'm going to go off on my own. So then I left March of 2020. It was almost exactly a year. And 2 weeks later,
The world shut down.
the world shut down.
Wow.
So it was
Wow.
what the good news is like and I don't know what I can share, so we may have to cut some, this part out, but like they offered me a $40,000 sign-on bonus to leave Chad's team and come over to Sotheby's. And basically the way to get out of that contract was you either made them that amount or more in the split, or you stayed with them for 3 years. And so I signed this contract with them, and they said they had 30 days to pay me the 40 grand. Well, 2 weeks later, the pandemic hit, and they said, you know what? I only had like, I don't know, 5 grand or something, 10 grand in the bank account. I had just left the condo because I had some condo projects that they were going on there. It was really noisy to stay there. So just rented this house in Miami, probably spent a little more than I should. And so then they said, you know what? We're not paying you the $40,000 anymore. The world's shutting down. And sorry, I don't know what to tell you. And so Chad basically said, do you want to come back? Because I don't want to see you fail. It's a poor time in the market. Obviously, no one knew what it was going to do to Florida in the real estate here. And I said, you know what? I've already made my decision. I'm just going to keep with this. And if things don't work out, I guess I can come back then. And I appreciate the offer. So I ended up negotiating with Sotheby's to pay me $5,000 a month over 8 months instead of the 40 grand up front. And basically, I feel had the market have turned the other way, they probably would have pulled the plug even on the 5 grand a month. But to start it, they're like, whatever, it's 5 grand instead of 40 grand, and we can push this can down the road. Well, then within a few months, the real estate market started taking off tremendously in South Florida. They continued to pay their $5,000 a month. And on the eighth month, I sold a $9 million property, which was a referral from that first one. And my commission check was like $200,000. I was 25 years old, second year in the business.
There's a joy. Like, you're like,
I was like,
I love this. I can afford my condo.
Literally. And so I was like, holy shit, I fucking made it. And it was like, it was the best feeling in the world.
Quickly did you spend that 200 grand?
Well, I had 100 grand, 80 grand in student loan debt. I was married at the time. She had 35 grand in student loan debt. So like to come down here with, an ex-mother-in-law saying, you're going to be out of business, you're going to be in my basement and all this stuff with like a chip on my shoulder, like I have a point to prove. And like a year and a half later, by, being able to pay off her student loans, my student loans, and, it was no one, I guess, thought that I was going to do that. And part of it was timing, but the other part of it was a lot of preparation and hard work. And the other thing is so to answer your question, how quickly, pretty quickly, because a lot went towards the student loans, but the other part went to getting out of Miami, which selling the $9 million house in Palm Beach, selling the $2 million house in Palm Beach. I was like, well, these are all my big deals are up in Palm Beach. Everyone in Palm Beach was, 80 years old or more, walking with canes. And I was like, there's no like real young agents there. Like in Miami, everyone wants to be the next hot shot $1 million listing agent. In Palm Beach, everyone my age was like, I don't want to be part of it. For me, I saw that as an opportunity to be more aggressive in the market and break in, since I already had some bigger sales at a young age, and just really learn the market. So I ended up buying a house up here with that check as well, and which was a story in itself. It was difficult to get the loan because since I was straight commission, they were basically looking at your last 2 years of income. Well, year one is 40 grand and you're 298,000, and I'm trying to get $1 million house. So all the banks were like, no, 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 no. And finally I found one lender who said, yeah, I'll do it at a 10%, loan to value. So I ended up closing on the house, and Brian knows that story is crazy as well.
I do want to just say, Nick, what you mentioned there about it being maybe a little bit lucky, but you really put a lot of that down to the hard work that you had gone through. I would completely agree with that, because there's not many people that would have spent the hours, the number of outreach that you did to even get yourself down to that position of being in Miami, to be fortunate enough for that. I'm a firm believer that you kind of make your own luck, and you've ultimately gone ahead and done that, and you've basically reaped the rewards of that. But everybody was writing you off, right? Everyone was telling you, you're coming back, you're going to be in my basement, right? You took the plunge of quitting your job, 17 days to get a brokerage. 2 weeks later, you're down in Miami. You've not met the person that you think you're going to work for even a month after you've lived there. Like, none of that is luck. That is all you putting in the effort. So kudos to you for that.
I appreciate that.
Because again, a lot of people would have stopped at those hurdles, even if they had got hold of him. Not many people would have flown down to meet him and then him not showing up. Like, a lot of people would have just been like, this is just not meant to be. And you continued knocking.
I think part of it's a little bit insanity, or that's just like the entrepreneur in all of us on this call, right? It's like, it's not for the faint of heart working for yourself and running your own business, because there is no show up, here's your to-do list.
There's no blueprint.
Exactly. You just got to figure it out.
You figure it out along the way, and you try to put your best systems and processes in place, and like figure out what works, and you figure out what doesn't, and then you make the adjustments. And in your case, like, you had to pivot a lot of times, but you didn't stop moving forward. And so now it's like, all right, I've sold a ton of real estate. I've made good commission checks, and I've done well for myself now in the last 5 years. Like, this was 2020. Prior to 2020, you sold that $9 million deal and you got your first large commission check.
Yeah,
right?
Exactly.
And now you fast forward just a few years here, like in 2019, when you were thinking about coming down to Miami, you probably would have never imagined
No.
sold $130 million worth of luxury real estate in South Florida
No,
in 5 years
and
from now. And you'll be like,
like
shit, I made it.
I read a book when I was a freshman in college called, Think and Grow Rich. And I'm sure, a lot of people have listened to it. And being from a small town in Michigan where, everyone has cows as pets and, there's just a lot of farmland. Like, no, it's not like New York City or like, you don't really realize what's possible. And so when I read that book, it really changed my mindset. And so when I read it at 19 years old, I said, which was honestly at the time I thought was a huge goal. But I think now looking back, they always say think big and then think bigger. I think it was too small of a goal, but I said by the time I'm 30, I want to pay off my $100,000 in student loans that I'm going to accumulate in college, and I want to make $1 million. And so I just, well, not just, but I turned 30 last September, so coming up on 31 here. But I doubled that and paid it off like in 2 years. So I didn't, I guess hard work. Like I didn't think that was going to happen as quick as it did, and I should have set a bigger goal. But that's
Yeah.
for me to keep pushing now.
I mean, that's awesome. And that's awesome to reflect on and I mean, it got my mind thinking about what, the goals that I've set are and like the ones that I've surpassed already and the ones that I have in the future and like similar to you. So like on that topic, now that you're at where you're at here in 2025 and you're at a brokerage, still selling and having a ton of success with luxury real estate, what is your goal moving forward? I know we met at the Raise Fest. You're looking to get into commercial space as well. Like, can you give us a little bit more of your thoughts on
Yeah.
that?
Yeah, that's a good question. So, I mean, ultimately, like I said from the beginning, like the initial goal was I want to go build this syndication machine. Let's go meet a bunch of high net worth clients, do deals, build trust in the environment, and then, let's build this investment fund. So 2020, when I went off on my own, things were going great. 21, things went better. Market continued to pick up. 22, even better. And then in 2022, I sold just under 50 million in sales, made in that year alone like $750,000 after my split. And so at that point I said, I don't even know why I like would even, really want to consider really switching gears. Like things are going so much better than I expected, on acquisition fees and all that stuff. Like it's going to take a lot more, maybe I stay this course. And then 2023 hits, and as we all know what happens, interest rates skyrocket. Actually towards, middle end of 2022 is when that change initially happened, but didn't really take effect into the market until like early 2023. And I mean, everything just came to like a halt. And so 2023, it was like my income was cut in a third from 750 to 250, which was still, which was still good, all things considered, and where I came from, whatever. But I quickly realized I don't have, yeah, I have control in my output, but the market has a lot of control in what I'm doing as well. And so to go from that level of income then back down, I thought, you know what, I need to re-engage my focus with the investment fund, because that's something that you can really build scale with. And, in the real estate sales business as well, at one point I had 5 agents working underneath me during, the really busy times. And basically, felt like you're just a manager of them. And it was hard to scale that because they would either come to you with as just to tell dad I have a fake job, and they come from, money. And, there's like, dad, I got a job. I'm a real estate agent, but they would never show up and they just have their dad's credit card. Or they'd come to you with all the drive in the world, and then they'd learn from you. And a year later, they'd be like, thanks for teaching me the business. I'm gone. And you're always like starting over. So, the real goal was always, I want a scalable, real estate business. And so, again, at one point, everything was going so good in sales. I thought, well, why do I even want to get into the investment fund space now? And then once I realized, all right, the market dipped, I don't have as much control. It's super hard to scale this outside of your, every year you could make, 250 to $1 million a year. It's great, but how do you really scale it as a business? And then that's what made me like re-engage. All right, at this point, I have over 100 clients that have bought $1 million plus properties with me as second homes. They're all accredited investors. Let me get into, repivoting that. And so I've done one syndication deal, which was a 30% return on investment. It was a retail property in San Antonio, Texas. I returned all the original capital back. They made their 30% returns. And then that's when I, after having the trust in them and a full deal cycle, I said, I really want to like, now I really have a track record with this to build off of and go more in this direction to really build passively, because there's some months in brokerage where you make the $200,000 commission check, but then the next 3 months you make nothing. And it's like, I don't like that. It's fun when you're younger to live on that inconsistency highs and lows, but it's like eventually with a family, you want to like be building year over year and not live solely on commission. I don't want to ever give up brokerage because it's been great to me. I mean, once it's built, people trust you and keep coming back. But I also want, more of my day-to-day focus to be on building an investment fund and, you know, passive and, year over year growth as like a real scalable business, and use that as like, oh, cool, I just sold a $9 million house as extra money to fund the investment company, and keep funding more investors by meeting them in residential.
So when you did your first syndication deal, what were the biggest differences that you found and felt between brokerage and ultimately syndicating a commercial property versus a single family property? Like what were the different conversations you were having like from a broker to a buyer or a seller of a property to how about investing in like what was the differences in those conversations?
Well, as I knew I wanted to kind of start heading in this direction, as I was meeting with my clients for real estate, I was telling them, hey, just simple conversations, curious about their story, how they got the money to buy a multi-million-dollar home, and then, just picking their brain. Have you ever invested in real estate? And then start to talk to them. Hey, I'm currently looking for an investment opportunity myself. I want to partner with some of my clients. Is that something you'd be interested in? And then quite a few of them said yes. And only, what was it, 5 or 6 of them ended up, investing. But it was a small raise. Like it was a $1.2 million deal, $300,000 raise, and it was a 10% pref, 2% or 1% acquisition fee, and then anything over the 10% was ours as for the GP. And at the exit it was like a 50-50 split. Now the tenant, which I learned in this deal, Grant Cardone always preaches multi-unit, multi-tenant. The tenant, thankfully for us, there were no issues. It was a good, solid, credit-rated tenant. It was Family Dollar store in a great location in San Antonio, Texas. So I made sure when I was buying it that it was in a good location. And they renewed their lease, 10% rent increase, whatever. But I realized from a single tenant deal, during the time of getting close to selling it, Family Dollar shut down like crazy number of stores, 1,500 plus stores. And thankfully, because I was in a good location, they didn't touch mine. But had that have happened, I would have went from 100 to a 0% occupancy. So I was like, never again do I want to do single tenant. It didn't happen, but I don't want to put my investors at any risk. That's my number one goal, is to preserve their wealth. And then secondly, it's the adding value to a single tenant deal is incredibly hard, because essentially all you're doing is waiting for the lease term to expire and then the baked in lease. But had I bought a multi-tenant deal in 2021, which is when I purchased this property, um, the rent increase went up tremendously. So if I only had a 10% bump every 5 years, that's 2% a year. Like any other tenant in property that didn't have that like hardcore lease that Family Dollar did, I mean, it would have quadrupled in value. Not, and then, I personally learned on that one. But as far as the conversation goes, it was an easier conversation for me because they weren't strangers. They already trusted me in the real estate space. And I basically was like, hey, if you ever want to invest in real estate, would you consider investing with me if I found the right opportunity? And pretty much they were all like, yes.
That's awesome. And so, with that being your first deal, I'm curious, how did you find it? Did you buy it yourself? And how did you structure your syndication? We talk a lot about structures and syndications and different models on the show,
Mhm.
but curious it sounded like it went very well. 30% return is amazing. You do well by your investors. You gave them their money back. I'm sure you made some good money on the deal. You bought it in 21. So how did you find the deal? How did you structure it? And then how long was your hold period from purchase to exit?
Yeah, that's a good question. So I actually, upon graduating college, had bought Grant Cardone's course after I met Scott Everett and was learning about syndication. And so you know, watching his course, ultimately, Grant talks about tough to find great deals on LoopNet, but it's good to find brokers on LoopNet. So I went to LoopNet, pretty much thought to myself, I want to buy a deal in Texas or Florida. At that time, I was living in Florida. In college, I had an internship in Texas. So I knew both markets were great. I was inspired by Scott Everett and his success in Texas. I lived there a bit, so knew it a little bit. And then I liked Florida. So I basically said, whatever comes first, I'll go for it. So I initially was actually under contract on a property in Jacksonville. And that broker said, "Oh man, I wish you would have called me a few weeks ago because there was a little bit even better cap rate deal that was in San Antonio. And if things fall through, is that one you'd be interested in?" I was like, "Yeah." So ultimately, the deal ended up falling through. The guy pulled out of it, and I ended up pulling out of Jacksonville and buying the San Antonio. So I was pretty much open to Florida or Texas. All I knew is I wanted like a major info location. I wanted Jacksonville, Orlando, Tampa, or South Florida, or in Texas, San Antonio, Dallas, Houston, like the major markets, just in case. As far as single tenant goes, I chose that asset. My dad's in commercial real estate, and he's worked for a public REIT for pretty much his entire career on the asset management side. And what they do is all they own are single tenant net lease retail assets. And initially was thinking multifamily, but when I raised the $300,000 and was talking to the potential commitments I could get from a capital standpoint, like, because I was only year two in the brokerage, I only had 20 clients at the time, maybe. So from that capital commitment, I was like, for $1 million in South Florida, that's going to buy me a 4-unit apartment complex. And my dad had 10 single family homes by the time I was born, and he said it was a management headache. And Grant Cardone always talked about 16 units or bigger, 16 units or bigger. Otherwise, don't bother. So I wanted to at least get started. I didn't want to wait to 16 units or bigger. I wanted the experience. And so I thought, why don't I buy a single tenant net lease asset then, where management's pretty low? I can focus on my brokerage business. There's not a lot of value add or experience needed. It's a credit rated tenant, pretty secure for my clients. And I can, like, when I underwrite it, 10% that I can pay them. So the deal was making 13% upon closing cash flow. And so basically I told my investors, I'll pay you 10%. I'm going to manage it. And so that extra 3% I'm going to get. Now, at the time, I had no management experience on a commercial property, but my dad had a portfolio of over 500 that he managed for his real job. So what I did was that extra 3%, I split it with my dad. So I had like a real, someone who has real management experience and years in the business, specifically on this asset class, to make sure it's run smoothly. All the CAMRECs are done correctly, since it was my first one, which gave my investors a lot of confidence too. They trusted me in real estate, but they also, were very trustworthy in the fact that my father was behind the deal as well, not only on a management standpoint, but a financial standpoint, as well as my like GP partner. He co-GP'd it with me. And so I split that extra 3% with him, and anything above 10% was us, but there wasn't anything above 10% because it was a set lease month to month, not moving up, and it wasn't fluid. And so the expenses were the same because it was a triple net lease. It was very easy to like underwrite it in that regard for a first deal, so it was good to start on. But then on the exit, I told the partners, the LPs, and my dad and I, that my dad and I as GPs would take 50% of it, and you guys get the other 50%. Now at the time, I got it at a 7.75 cap rate. When the market was at like a 6.5. So I thought, wow, this is great. I could probably trade it at a 6.5 plus my hold time was 3 years because their tenant or the lease renewed in 3 years. So I thought, this is great. Like in 3 years, their lease is going to come up. It's a solid tenant. It's going to go up 10%. I can get 150 basis points less on the cap rate. And so really push the value in two ways. I got it at an attractive cap rate, and their lease is going up 10%. Well, because of the Family Dollar situation as a tenant, even though mine didn't go out of business, a bunch of Family Dollars that were dark with no tenants in them went to the market. So it kind of flooded the market with Family Dollars, which made the cap rates go up. Also, obviously, interest rates went up. So, cap rates went up. So I ultimately got out and still made money on the exit, but it was very little. Like it was pretty much the return on a year-to-year basis is what it came out to be.
That's a lot of really good lessons that you learn from doing that, Nick. And I think it's really important that you mentioned there, like the trust. So people trusted you because of your real estate experience. They also trusted your father because of his experience of managing assets like what you were presenting to them. So
Mhm.
building trust with that investor, with those investors is obviously a huge part of this. Were there any kind of challenges that you faced whilst managing that property at all? Again, you make it seem like it was just kind of like just a turnkey business almost. You bought it. It was like,
Yeah.
here's our returns. Hopefully the cap rates, well, we can compress the cap rate and right. And then we get to sell it. And unfortunately, the dollar stores are like shut. What did you say, 1,500 or something across the
Yeah.
US? Like, again, we talked about luck earlier. That's probably seen as a little bit of bad luck, really. You can't
Right.
predict that they're going to shut 1,500 of those stores.
But the
But
key to that
was there
lesson
anything
is
that
buy it
happened?
right. Because if I would have bought it at a 6.5 cap rate where market was, or if I would have bought in a poor location just to get a better price or something like that, I probably would have been out of no without a tenant, or I would have been negative on the exit because I bought it at a basis that it was selling at to begin with. So like you make your money or you protect yourself on the end. But as far as management goes, I would say i- like on a month to month basis, I agreed to pay our investors every single month. So on the 5th of every month, they got a distribution check that was set up automatically. The money would come in on the first, the money would go out on the 5th to pay off everyone. And so that part, once it was set up, was pretty easy. As far as management on the property goes, technically it was a double net lease. So the only thing we were responsible for were the four walls, the roof, and the parking lot. So on a monthly basis, we had the grass cut, the trees trimmed, and parking lot swept, that kind of stuff. But once we set up those contracts, which fortunately for me, my dad's company is national that he works for. So they had like contracts that they already knew in Texas and stuff. So once we set them up in place, I just paid the bills on time and made sure. The only real issues I say is, a couple times, the tenant would call, "Hey, there's a roof leak. That's our responsibility. We got to get a roofer out there quick." Or, um, "Hey, the parking lot lines need to be striped or something." Or there's debris and we need the parking lot cleaned a little extra this month. But honestly, one of the reasons why I chose this asset in the beginning was because I was so focused on the brokerage business and getting that off the ground. I didn't really have time to manage a 4 or 5 unit apartment building. And so it worked well. And I never went into it with, I always, obviously, there's no guarantee in real estate, it's an investment. So I always went into my clients like, look, the preferred return's 10%. You know, if it goes up a lot more, that's great. That's the goal. But if it doesn't, the real goal here is to make sure you're getting 10%. And they were all really happy with that because, like, where else were they getting 10% on their money without doing anything, without taking a risk? I personally signed a personal guarantee on the loan. No one else did. So, I mean, they were grateful of the opportunity and I did everything I promised them I would do.
I think you hit on a lot of important points there. First, you mentioned buy right, which is a big component of getting into real estate at the right price and at the right, depending on where cap rates are. A lot of people say you make money when you buy, right? If you can buy it at the right price, and if you have a business plan that supports that. And then secondly, and maybe more important, you did everything you could to do right by your investors first before you were looking to get anything from this deal, right? So like they put their trust in you to manage the deal, to buy the deal, to provide them a return. You had a great quality asset backed by the real estate, solid business plan. You bought it right. Now there's some unforeseen circumstances with the family dollars that nationally, but at the end of the day, they trusted you and you did right by them. And so you likely have repeat investors for any
Yeah.
investors that were in that deal for you, right? So now you're going to move forward, look for another quality asset, and continue to grow your business. And so from there, with that deal under your belt, and now shifting that, your thought process of what you mentioned earlier, not necessarily going to a single tenant. What's the focus moving forward when it comes to the investment fund and what you want to do?
Yeah, so a friend of mine in brokerage, actually, Shane Decker, I met him and he was 3 to 5 years older than me. And so in 2020, when I left Chad's team and joined Sotheby's, he was at Sotheby's as well. And we met real briefly before the pandemic. And then, you know, pandemic happened. No one was in the office, but I said, Shane, how long have you been a broker? What are you focused on? He said, you know what? Actually, I'm not focusing on brokerage anymore. I'm leaving and I'm going to start an investment company. So, syndicating deals. And so we stayed in touch over the time on Instagram and whatever. And so January of 2024, I saw in the Real Deal, the news publication, Infinity Properties with Shane Decker closes on $43 million industrial park. And I was like, holy shit. I was like, I got to give Shane a call. Like I've seen his deals along the way. Like his first one's a $5 million deal. And so ultimately I reached out to Shane and I said, hey, Shane, I'd love to come, take 15 minutes, like what I love to do, reach out and social media and say, can I come, listen to what you did. I mean, like I knew you as a broker when you were driving a normal, Mercedes, and now you're driving a Lamborghini and, just bought a Ford, like literally, and now you have a full office. And, he kind of saw what I see now, that, the scalability of the business, because he was 5 years ahead of me. So then, and he went and did it. And so ultimately I went down there and him and I being good friends and knowing each other for a few years, talked to me and showed me his business. And ultimately I said, hey, look, why don't I have high net worth investors. Why don't I'm selling my commercial property. Why don't we, try and segue into like partnering, co-GPing on a deal? You have like a ton of experience. All he buys is multi-tenant, small bay industrial parks in Florida. And so I said, why don't we partner together on a deal? And he's like, yeah, I'm all for that. Like, help us find a deal. So ultimately, I started going once a week to Miami, then twice a week to Miami, then 3 times a week to Miami. And then he said, you know what? You're pretty good at this. Like, why don't we just offer you a full-time job to lead our acquisitions department? And so I told him, I really can't like give up brokerage by any means because,
Right.
based on, where he was at and his ability to pay me and what I was used to making, plus I had a business going. But I said, I'm loving learning about this asset class and, I'm happy to do this. So anyways, we ended up finding him a deal. He ended up closing on it for like 17.5 million. But he wanted, at that time for me to move to Miami and, commit a bit more. And basically we ended things mutually, but I said, hey, look, I'm not looking for a job. I was looking for a partnership and, I'm going to do this on my own. So I learned a lot. I guess to answer your question, I learned a lot about the industrial asset class and I really fell in love with it. Like the initial thought with Scott Everett was multifamily. I think multifamily is obviously an amazing asset class. However, for me, what I loved about industrial, it's very management, it's not management intensive, is what I should say. It's just a concrete, pad, some concrete walls, shorter lease terms, but a little bit longer than multifamily. It's just a well-performing asset class. And I think there's, always going to be demand for it. So ultimately, as far as for me, what I'm looking for is I want to stay focused in Florida. I know it best. People trust me here in terms of me knowing the market. And I'm bullish on the longevity of Florida as well, much more than Texas because I don't know Texas, right?
Right.
I've studied Florida for a while now. So want to find something in Florida and I want to do a multi-tenant industrial or multi-tenant retail because I really did like the retail asset and my dad has a lot of experience with it, but I don't want to do single tenant. And on the flip side, with the market the way it is, like we were talking about, briefly before we went on air, it's like equity investments are great and there's a lot more upside to them when they go right. But the lending and debt fund space is I'm actually doing my first debt fund deal right now. It's a, $14 million hotel loan, which helps build credibility with your investors because they're quicker turnarounds, 6 to 18 months bridge loans backed by the real estate. It's low leverage, so they foreclose, you get the property back, your investors are more secure, it's quick in and out. They don't have to wait 3 to 5 years to exit the deal. But I ultimately, like, I'm starting, a company, Envision Capital Group, and want it to be focused on debt and equity investments, working with my high net worth clients and whatever kind of comes first, open to both options.
That's amazing, Nick. It's good to see that the hunger hasn't died from that young gentleman who chased the dream to go all the way down to Florida to build a real brand for yourself, and ultimately now kind of moving that into more of a real estate empire, if you will, as you continue to build out Envision Capital Group. Other than that deal that you just mentioned, do you have anything else on the horizon, or how can people who may be interested in either selling or buying a property from you in West Palm Beach, or ultimately investing with you, where can people reach out to you and get hold of you?
Yeah, for sure. So big on social media. I'm a believer in it. You can meet a lot of people through that. But so Nicholas Grodzicki, just my first and last name full. It's just at Nicholas Grodzicki on Instagram. But I'm happy to give out my direct cell as well. So it's 561-888-3774. Um, I'm a broker. I get calls all the time.
Yeah.
Yeah. They feel free to give me a call. And in terms of like next deals, and investors, like I'm always looking to partner. If someone was open to doing a fund to fund situation, or if someone just wanted advice on, getting started in brokerage or syndication, or I've read tons of books. So, which books were the best, which one should I, not read, that kind of thing. Always happy to give advice if someone wants to hear. But as far as like deals on the horizon, like I mentioned, I'm working on the my first debt deal right now for 14 million. It's a hotel deal. And properties are actually located, one in San Antonio, it's a hotel, and the other one in Austin, Texas. And then I'm working on another bridge loan debt deal on a property in it's a residential property, but it's an investment residential property. That's a $7.5 million loan. And then I'm still actively brokering. So, in the last week, I've just signed 3 new listings and put one under contract. And everything I do is $1 million or more in West Palm Beach and Palm Beach. So just basically live and breathe real estate, whether I'm reading about it, I'm working in the investment, or selling the property. It's like a major passion. And so, yeah, I always love helping people out and like, giving back, because I wouldn't be where I am if people didn't like teach me along the way.
Best book. You mentioned you like reading. Give us your best book. You have to pick
And
one.
best book in what way? Like in terms of biography and of like successful real estate entrepreneurs, or like how to, or
I'll leave that up to you.
okay.
I'm just going to throw best book out there.
The best book that I've enjoyed reading is Losing My Virginity by Richard Branson.
Richard Branson. Oh yeah, Virgin. He's
Yeah, yeah.
insane.
And so it's a
He's got like
funny, like,
35 businesses.
yeah, literally. So it's like a funny play on words, but like he's not really a real estate entrepreneur, but it was one of the most fun books that I've read, because it's not just about his business. It's from his whole life story. And it's just fascinating to me. Like he's given every penny to every business. And if he would have lost it, he would have been, nothing left again. And he just always found it a way to succeed. And now he has like you mentioned, 400 businesses with the Virgin brand, cruise ships, you name it. And it's just a really fun read. But I would say, like, as far as like best real estate book, I really like, from a biography, George Perez, who's the owner of Related Group. It's called Powerhouse Principles. And that was a really good book as well.
We used to. We've obviously got a massive footprint here in New York and one of the biggest real estate brands. But no, those are good. I haven't read either of those, so I'll add them to my list.
But let me ask you, what are your 2 favorite books? Because I'm always looking for new books to read myself.
Yeah, I mean, I always go back to the holy grail of Rich Dad Poor Dad.
Yeah,
'Cause
Poor Dad, yeah.
it got me into the industry for sure. And then similar to what you just said about Virgin is Shoe Dog by Phil Knight is a similar concept. And it was just
Oh,
like motivating for me to read that book, because it's like the stuff that he went through to start Nike, and like his trips to Japan, and like he just figured it out along the way. And it's like probably similar to what Richard Branson did with Virgin, because like there's so many things you can't even, you hear like even like Zuckerberg talk about Facebook. He's like, dude, I started this shit in like my dorm room in Harvard. Like, I would have never imagined it to be a social network that is one of the biggest companies in the world that now connects billions of people together, right?
yeah.
So it's like you'll never have the end all answer like when you're getting started, but at the end of the day, just get started and make moves. But yeah, Rich Dad Poor Dad to get me started in real estate, and then Shoe Dog by Phil Knight was a good one that I saw.
Yeah, no, that's good to hear, because I recently bought Shoe Dog. I haven't read it yet, but I did recently buy it, as well as like Tesla, Musk's book.
I
Well, it's
listened to
called
that.
Musk,
It's like
but I heard that
18 hours, dude. I didn't realize how big the book was. Like if you look at the book, it's like that thick.
literally.
Like I would listen to it every time I would go run. And I'm like, damn, I've ran like 100 miles and this book's still not over. But it is a good one too. His life is crazy.
It's like
I'm not the best
how many
reader.
miles till you need to be recharged? And you got to 100 miles, and you'll be recharged for my book.
Yeah.
What?
I'm not the best reader, but I would say the Challenger sale, not really real estate related, but from a sales professional standpoint, I think that one really changes your mindset as you're going into really ultimately challenging people's thought processes and things like that. So challenger sales, definitely one that's up there for me. And then never split the difference as well. Just has to be.
You can't get half the body, right? I love it. Like he's the FBI initiator and he's like, you can't get half the person back. You got to get the whole thing. Like, so how am I supposed to do that? Like, you just keep asking, how am I supposed to do that? Also,
for me.
I would also add, like, for your listeners, like, especially, in it being into syndication and that, like, probably the best syndication book that I've read that isn't a super common one. It's called Investing in Retail Real Estate. The author is one of like the best guys out there. His name's Gary Rappaport. He owns a huge company in Washington, D.C. He just closed on a $75 million shopping center. It's not just to retail real estate. You can take his concepts. The start of the book's really about his life and how he got started and, not coming from much and creating this company. But then the middle of the book, and it's also a 100-mile runner book. It's like, 600 pages. He actually teaches a MBA course on it at I forget what university. Anyways, yeah. So it's a big, like, almost like college textbook. But it's definitely not your first book to read in real estate because some of it's a little over your head if you're new to the industry. But if you're intermediate or advanced, like, he literally spells out everything on how he structures his deals. And again, I found him online, emailed him, got on the phone with him, and I've had, like, I don't know, 15 Zoom calls with him. He built an Excel underwriting template for me. Like, he talks about at the end of the book, a third of his time with his family, a third on business, and a third on giving back. So he literally says, reach out to me and I'm happy to help. And he truly means it. Like, he's given me a lot of his time and he's taught me a lot. So
that's incredible. Yeah. I mean, honestly, like, your story is admirable with, like, the action that essentially you take to put yourself in the positions to be where you're at. And so, really excited that you came on today. Love catching up with you. Glad we met in Phoenix. And, obviously we keep in touch often now, but excited to see where you take Envision and your brokerage and just the success you've built over the last 5 years, continue to build on.
yeah.
And we're excited to continue the conversation with you. I'm sure we'll have to have you back on another future episode because there's probably much more we could talk about, and then continue to, because we've already talked for an hour, and I don't know, it just goes quick when you're having good conversation.
Literally, I think when we first met in Phoenix, it started out with both of us having burgers. You mind if I sit right here? And it turned into like a 3-hour long conversation of your story, my story, and laughs and, the craziness of of everything. So yeah, I'm really honored to be on this. And, I would love to do, find a way for us to do deals together, continue building the friendship and professionalism as well together. And happy to rejoin the show and would love to have you on my podcast. That because of this, it's inspiring me to start one. So this is my first one and would love to have you guys on.
You're a natural at it, Nick. So I wouldn't worry too much about it. It's just talking, and that's obviously something you're very good at. Give it you
Probably two guys.
from
I don't shut
8 a.m. to 8 p.m.
Right, exactly. So,
All right,
cool.
well,
Thank you, guys.
Thanks, Nick.
Thanks, Nick.
Thank you. Take care.
Thank you for tuning in to the Peak Profits Podcast. We hope today's episode was not only inspiring, but packed with actionable insights for your passive real estate investments. Subscribe so you never miss an episode. And if you enjoyed the show, please leave us a review. Your feedback fuels our passion to bring you even more valuable content. Stay connected with us on social media and visit 7peakcapital.com for exclusive resources and updates. Until next time, keep striving towards your financial goals and let's reach new peaks together.